Aaron Fragnito with People's Capital Group. I help people invest in real estate. I want to have Joe here do a live event tonight because Joe focuses on self-storage. I focus on apartment buildings, similar to what you see here behind me, this garden style apartment building. So I think apartment buildings are a better investment, and I'm going to convince Joe of that tonight. And Joe thinks self-storage is a better investment. He's going to try to convince me of that tonight, although I'm very skeptical, but we'll see. We'll see. And of course, the listeners will be the winner here. They'll figure out what's a better fit for them. And the truth is, you probably want to be diversified and have a little bit of both, but I don't want to give away the conclusion just yet. So let's go ahead and we can start here. Joe, you want to introduce yourself?
Yeah, absolutely. Well, Aaron, thanks so much for having me on today. We met a while back and really got to know you. And thank you so much for allowing me on your show and meeting your guests and what have you. I've been a real estate broker for over 24 years. All in all, in real estate, over 30 years. I have a really great cosmetologist that kind of helps. But I've done a lot. Currently, fast forward, I'm a real estate coach for a lot of incredible salespeople, broker owners, people working mainly the brokerage side. I've done investing, fix and flips, single family. I did do multifamily in the past, but really recently I've been shifting my focus more and more into self-storage. And that's kind of like my cup of tea right now.
Mm-hmm. Great. Yeah, you know, I actually started as a real estate broker as well, real estate agent in this business in 2010. So I don't quite have the years that you have in this industry, but definitely a breadth of experience doing short sales there. That's how I got started in a tough market. But I always say to agents that kind of got started more recently, like they don't know a bad market. You know, we used to put up listings and the phone just wouldn't ring. Like no one would call. And you'd be like, okay, Mr. Seller, we got to drop it like 5%. And they'd be like, no, and we drop it 5%. And the phone still wouldn't ring. We're like 10%, 50, you know, it was a terrible market. That's how I got started. What was the market when you got started? What was the market like when you got started?
In 1998, as a real estate agent, it was a lot of short sales. So think about selling a home 5 or more times. You'd have a buyer, they'd fall out for whatever reason. They were too impatient, or the bank didn't approve the price, or whatever. I would resell it about 5 times or more. And I just got used to working really, really hard, you know. So I wasn't accustomed for things to come easy and naturally, like a lot of agents out there the last 2 or 3 years. The people that recently got in these last 2 to 3 years are up for kind of a rude awakening, I would say. So like, I would just say, you know, if you're an agent out there, hunker down, roll up the sleeves, start to get ready to work. But also, I guess the reason why we're both here, you know, what I teach a lot of the real estate agents that I coach is, man, you got to invest in property. Take all these fat commissions and move them over, whether it's multifamily, single family, storage units. You got to create that end game, the strategy to get out of the rat race, like Robert Kiyosaki talks about in Rich Dad Poor Dad.
Yeah, absolutely. That's what got me turned on to real estate and the ownership of real estate. I looked at being a realtor as a pathway to become a property owner. And although I got to say, there are days I kind of wish I kept my realtor business going because it was very lucrative, you know, like the checks were rolling in. But then I gave the government about a quarter of my income and had to work for about 3 months to pay them. So I was like, I don't want to do that again. And I focused on the Rich Dad Poor Dad method of paying yourself through refinance, which you could do through apartment buildings or self-storage. But we'll break into this tonight. Let's get into our topic here. And but that's a nice little background on how we got started, both as realtors, and that's a great way to really learn this business and just make some money. You know, make some money coming in. That's all it's all about.
I think the big one, I guess, for a lot of the investors out there, get out of the rat race.
Yeah, exactly. And that's it. You know, it's important. Once you own real estate as a realtor, you just have a different understanding of it as well. You know, if you only own a single family home and you're a real estate agent, you really haven't had the experience of being a landlord or an investor. And If you're not selling investment properties, maybe that's fine. But I think if you're getting into that space, it really is important to actually own and be investing in real estate yourself to understand how it works, not just be like, oh, I read a book about it. Also you're going to get more clients that way too, because I know as an investor, I'm only going to really work with people that are understand real estate investments. So, all right, so let's get into this here. Okay. First question for you, my friend, is why do you prefer investing in self-storage?
Fantastic. Okay, so I think we're going to go back and forth with some of the same questions. So
Yes.
why do I prefer self-storage? Well, part of it is, like I mentioned earlier, is I've been in real estate a long time. I did the single family, the multifamily. I like learning and I like exploring, and self-storage was a very recent niche that I found. That's something new to challenge myself a little bit more. Why I really like it? I mean, 1 out of 10 people out there are in self-storage, whether they're investing in something or they're renting out or they're somehow involved in one.
Mm-hmm.
When somebody moves out, I really like the fact that I don't have to make it ready, where I have to change the carpet, I have to repaint it, I might have to fix this and that and the other. Well, self-storage, hey, take a broom, a blower, clean it up, and you're done.
Right.
Rent it out for the next one.
Yeah.
The other reason why I like self-storage is, I still have some single family, don't get me wrong, and invest in some other multifamily, what have you. But when it comes to evictions,
Mm-hmm.
I mean, geez, it's a lot different, especially in the states you're in, whether you're in a landlord-friendly state or a tenant-friendly, a blue state or red state. There's things that I learned over the years where with self-storage, hey, if they're not paying, as long as I properly notify them and let them know, hey, you're past due,
Mm-hmm.
if you don't cooperate, I'm changing the locks and I'm going to auction your stuff.
Right.
And depending on the state, if you have a multifamily or single family,
Mm-hmm.
I mean, it could take a long, long, long time. And
Mm-hmm.
a tenant that knows the rules, they're going to
Yeah.
milk the cow, and it's going to be hard to evict them.
Right.
That's the other reason. Another reason why I like self-storage, the expenses. The expenses are usually 35% or lower on self-storage. Whereas if you're buying multifamily, single family, you're looking at 40% or 50% on the average, which to me, it's what the market is bearing on multifamily, but it's a bit higher.
Yeah.
With self-storage, I could fully automate my property management. I don't have to have too many boots on the ground. I don't have to be very hands-on. As a matter of fact, some of the recent acquisitions I haven't even seen the property. I have very great people helping me out with the improvements, the rehab, the management, the landscaping, etc. So those are some of the different reasons why I like self-storage.
Yeah. Yeah. Okay. And then to turn around on my end, why do I prefer apartment buildings? Well, I always say people are going to pay for a roof over their head before they pay for a roof over their junk in a time of recession. So that's one of my favorite lines to say. So I do feel it's a little more recession proof. But you're absolutely right. The eviction process is more complicated when there's a person living in the property. The cost to maintain that real estate is more expensive. Additionally as well, generally you have a little more management intensive because there's people living there. People have more needs than boxes. So I get that. Absolutely. But yeah, and depending on the age of the building, your cost can be between 35 to 50% if the building's very old or it's a smaller building as well. But I really like the idea that, it's a commodity that we all need, water, food, shelter, and you just can't go wrong with shelter. When I watch the news these days, there's, oh my gosh, where do investors go for shelter? They say, where do you go to protect your investment today? And I understand, interest rates rising are going to put some pressure on real estate prices for sure, but rent is, in my opinion, going to continue to stay strong. I do think that, they haven't been building enough housing. It is a little harder to build housing than it is to build storage space, although there's an economy of scale, there's challenges to building both. But I would say the harder it is to build something, the longer it takes to create it, and the less people go out and take the risk to create it. So it's almost like, the barriers to entry to develop an apartment building is huge. It's not a lot of people or companies out there capable or willing to go about and do that. So we just see a continued demand for it. There's definitely areas that have a shortage of self-storage, and you can find those opportunities as well, just like there's areas that have a shortage of housing. So, same idea though, but I do think the recession resiliency of apartment buildings is a bit stronger. And I guess I'm just more familiar with it. I think I've lived in apartment buildings. I like apartment buildings. There's more of them for sale. I think there's a lot more existing apartment buildings. I think people understand the idea of investing in apartment buildings as well. Part of my job is explaining why it's a good investment and why we're a good investment and why it's a good long-term strategy as well. So, on the fundraising end, I think it's a little more of a common space as well. It's just something that's very tried and true, where self-storage is a little bit of a newer space. So, we'll see in a big recession where things go. Obviously, all assets are going to face headwinds, but I think, people are, like I said, people are going to pay for a roof over their head before they pay for their junk in a tough time. So that's my main reason there.
Got it. I like what you said about building, because with storage units, sometimes some of these facilities, if you're doing the value add, some of them, they don't have electricity, some of them don't have water. And in a lot of cases, you don't need either or. And if you find a nice piece of dirt in a good path of progress, there's already some of these units that are already pre-made, pre-built, and you just put them on the dirt, so I like that. I mean, I haven't developed yet or went that direction yet, but it's definitely one of the things I am looking to explore because we're in a transitionary market right now for sure. As the rates went up last week, 75 basis points, it kind of spooked a lot of people, and some people are now getting off the fence to buy or rent or sell or stay put. I think either or, whether you're going multifamily or storage units, these people that are downsizing, they're going to need storage, right? Some of them will be there indefinitely. You just never know. But yeah, no, I like how you brought that up.
And I, now that, my groceries are going up, my gas is going up. So my wife and I have the conversation, well, what can we take out of our budget so that, our cost of living doesn't go up, right? And then like every family has right now. And I don't know, if I was paying like a $500 a month storage unit, I might be like, maybe I'll just put that in my parents' basement or something, and save the $5. But I'm not gonna be like, I'm not gonna pay my landlord anymore. Like that's the plan,
right.
Honey. We're just not gonna pay rent anymore. No, I mean, you'll be evicted. So, you're gonna kind of, pull out. It's a bit of a luxury to have. Maybe you call up a buddy who has a basement or something, you put it there. But hey, we'll see. I think storage units were around in 2008, right? They weren't really quite as popular, I guess, but I'm sure they took a hit like everything then, so we'll see what if there is a recession, what type of headwinds that puts on storage units,
For sure. Let me throw one at you, Aaron. What challenges have you had in managing apartment buildings?
Oh boy, no challenges here. Easy peasy, Joe. Easy peasy. Just buy a mismanaged, like multi-million-dollar apartment building where all the tenants are used to not paying their rent on time and everything kind of needs to be fixed up. And it's not that hard. It's not that hard. No, I mean, listen, the management end of it is the single hardest part of repositioning apartment buildings, right? So you make your money on apartment buildings by buying something that's not really managed all that well, and the tenants have bad habits, and the place needs physical renovations, and there's things that maybe aren't up to code or just don't make it a nice place to live, and you have to change all these things, and that can mean evicting non-cooperative tenants, doing tons of different types of renovations, figuring out how to kind of stretch your dollar, not over renovating the building, not doing stuff that's not going to make a difference, but then making sure you do all the stuff that's required for families to feel comfortable to live there and tenants to want to live there and to be comfortable paying more rent to live there as well. So, repositioning apartment buildings is a totally different thing than just buying a turnkey building and collecting the rents. It's really, Seth and I, it's funny, we're looking at two different types of opportunities right now. We're looking at a 63 unit in Trenton, New Jersey, with about 36 units we're going to need to turn over, renovate, release for top dollar, and rents will increase by about 25% if we do that, and increase the value likewise as well. So huge value add opportunity there. The competitive buildings are leasing for much more than us, so I think we're at a safe price there. But then we have another opportunity, 18 units, turnkey luxury townhouses in Fort Lee, and just totally opposite end of the spectrum, as far as management goes, like luxury tenants, high-end housing, room to improve the rents, getting it for $2 million below asking price. So, positive stuff there. But, talk about, an easier management ideally, right? So property management comes in many different shapes and sizes. I've owned Class D real estate. I've owned Class A real estate. They're different management headaches, but both have their headaches. But Class A is definitely, easier to manage in its own way. But you also have to keep a Class A building then. That's kind of hard too. It's got to be perfecto. If the landscaper doesn't show up, that's a problem. So, but yeah, you have to know what you're doing. That goes down to good staff, good knowledge, local market knowledge, knowing how to navigate the red tape, which is another question there, and understanding how to keep your costs low as well by working with the right people, fixing things the first time, fixing them once, not hiring the wrong contractor, and having a good leasing staff as well, leasing to good tenants, so you're not dealing with evictions constantly, and fixing up beat up units, and attracting the right tenants by creating the right type of building so looks nice and smells nice and has the amenities that you need to attract those tenants. So when you create that environment, it kind of just naturally attracts the right tenants, and the market naturally tends to fill up the units for top dollar as well. We're getting higher than targeted now. So property management is everything. You can make money in Texas or Arizona or New Jersey. You can make money through self-storage, but if you don't manage it the right way, you don't have your systems in place, you're not going to do well. Same thing with apartment buildings,
I totally agree, Aaron. That's one of the things that I've been recently learning more and more as these recent acquisitions. The other thing that I would say for me as a challenge for storage units is if you buy too small, because I did acquire a small one recently, less than 20,000 square feet. And it was really hard to find someone to help me manage it, because you don't get enough cash flow if the units that you own are too small. So hiring a property management company or person will tap into your expenses, and then your cash flow is not very impressive. So what I learned over recently is make sure you do hit that sweet spot of maybe going to the 20,000 square feet or bigger when you go into the storage unit space. I'll share a little bit of a horror story personally that I experienced on the single family, which is kind of maybe in the multifamily as well, where once upon a time I owned 3 properties in San Antonio. Mm-hmm. I bought them brand new, Aaron, and I had a property manager, and you are so right. Hiring a great property manager is key. Unfortunately, I did not at the time. These are brand new single family houses, mm-hmm. by KB Homes. And all of a sudden I was getting my statements from the property manager, repair, 3 months in a row, Aaron. Mm-hmm. And I go, something isn't right here. So I went out of my way, and somehow I found the tenant's information. Mm-hmm. And Aaron, I called the tenant, and I go, hey, what's going on over there? I'm getting all these repairs. What's going on? Yeah. You know what the tenant said, Aaron?
What's that?
He goes, what repairs?
Yeah, of course.
Oh my yep. God. Oh my goodness. What is the property manager doing? Instantly fired. He was ripping me off, right?
Yeah.
So
yep.
Yeah.
That's I had hired a management company, and they would meet tenants of the property, lease it out to a tenant in the morning, get the security deposit, get the first month's rent, and then sign the lease. And they'd be like, all right, you can move in a week. And then you meet another tenant there that afternoon, get a security deposit, get a first month's rent, sign a lease. All right, you can move in a week. They did this 3 or 4 people. So they leased the same unit to a bunch of people, and then they ran off with the money. And then we found out that he was doing it to other people as well. And we ended up suing the company, a small company, and we had won. It was like small, like $8,000 or something, but it was crazy that, what a headache. And obviously, having to clean up that mess then. And I've also hired very large nationally known property management companies that manage tens of thousands of units. And, you talk to their sales team and they promise you the world. And we actually had them running our properties. They were at about one of our properties, like 75% collections. They're like, that's the best you're going to do in South Jersey. They just have 25% lease loss, like all the time. That's what they like, when we were, of course, signing up with them, they're like, we're going to be at 98% collections and and they're just dismal. So, really it just felt like a number on a screen with other property management companies. I did hire one decent one. I'll say Crown Management, Vanessa Ronaldo. She's good. So if I were to ever hire a property management company for more of like a turnkey property, then I would hire Crown Management. But, we developed our property management company because we had to. It wasn't like, oh, I want to be a property manager. No, like we had to develop it. We're like, if we're going to own a bunch of real estate, we're going to use people's capital, other people's money, and put it to work in real estate and put our reputation on the line, then we need to really control these assets. We can't just trust a third-party property management company that's going to do all these shenanigans. Plus, we need performance out of the building. These are mismanaged assets. This is a heavy lift. It's not really an easy job at all. It's a thankless job, in fact. So we recognize that, and it costs us money. It's not a profit center for us. It's still not a profit center today. We don't charge a lot for it to the properties. We charge a discounted fee. So, it just makes better returns for our investors. And it's a tough part of the business. It's not a fun part of the business either. It's the least fun part of the business.
I'd probably say the toughest.
Yeah, it's the toughest and the most important in a lot of ways.
Oh,
like,
yeah.
You can like pay a little more for real estate than you maybe should have or wanted to. You could maybe make a mistake on the renovation and hire the wrong contractor. But like, if you don't have the right management in place, just forget it. Like that's not a forgivable, situation. It's not really a fixable situation if it goes on for too long,
Absolutely. Absolutely. Have you ever considered investing in other types of other real estate, Aaron?
Sure. So no, I really do like self-storage. I mean, that's why I want to have you on here. I think if I'm looking at a deal, I'll probably call you up and pick your brain on it. I think it's a good space. That's probably where one of the spaces I would go. We like ground up development. We're developing a couple duplexes right now, but we would probably develop an apartment building. I like the idea of converting real estate that's not being used, like an office building. You see a lot of vacant office buildings these days, and converting that into housing. That's a space I want to get to. But again, I'm back to owning housing, so just converting real estate that's not being used properly into the highest and best use of it. But we own mixed use real estate. I don't think I would get much into office space. Retail is okay in the right area. I would consider that like a strip mall or something, with like offices above it or apartments above it. I like that. But I probably I'd probably go self-storage, like my second favorite. How about you?
Yeah, so definitely storage. I would definitely stick to that. I like you said, retail, because actually one of my neighbors is getting big time into retail, and there's lots of benefits from it. Some of the folks on the audience probably heard of triple net or absolute net, where it pretty much operates on its own. It's a very passive play where like tenant takes care of everything, taxes, maintenance, all that good stuff on triple net or absolute net retail leases. And I think you could really force the appreciation pretty quickly. The tenants do the TIs, the improvements, and there's your value add where you don't even have to put hardly anything into it. And they upgraded your property, because usually when they leave all those improvements in there. And so I have considered retail. That is definitely one of the things. But I think I'm going to stick to storage, and I definitely am learning retail right now.
That's a good point. Triple net leasing is a space that I should have mentioned that. Absolutely. I love the idea of like owning a lot, having like McDonald's come in and, maybe not, I think they want to buy it, but like a lot of big, a lot of stores like that, great brands, Wendy's comes in, they lease that land for like 100 years or something, or, they'll do, and it's a triple net lease. And then they build the Wendy's on it. They do all the infrastructure, the roads, everything. and now they're paying you, and the return on investment it may not be as aggressive as like owning an apartment building, but it's completely really a passive option. Talk about, no risk. If the place burns down, doesn't matter, if a tree falls on it, if taxes triple, obviously it matters if the place burns down or people get hurt, okay, but it doesn't matter you financially in this scenario, okay. So but yeah, that's a great structure for the landlord, and it's really a win. Well, I guess it's a win for the tenant, but it's a win for the, as I say, win-win. I mean, yeah, it's a win-win, but it's a huge opportunity to have your land, your building improved, and still own the real estate, have a really, really strong tenant there as well. It's great.
Yep, no doubt, no doubt.
Yeah.
Do you think apartment buildings are still a good investment with rising interest rates? We talked about the bump last week of 75 basis points. What do you think, Karen?
Sure. So yeah, right now you just got to buy smart, right? And I've been talking about this to a number of investors today. You want to buy, for a great price, first of all, which we're starting to see prices actually come down a little bit, and a lot of it if you're working in the right with the right brokers and the right opportunities. So that's really interesting. And we're also when we price out our buildings, we can project, we put out projections of 5, 10, 15 years. So we can say, okay, what happens if inflation slows down to 2%, right? Let's assume that. Let's assume interest rates go up another, 1 or 2, 100 or 200 basis points. Let's assume cap rates possibly go up 50 to 100 basis points, or more, right? So we want to stress test a property. What happens in these scenarios? What happens if all three of them go on, right? And then see, okay, well, what's the price we want to pay for the property then, and then stress test, okay, what's a very likely scenario? Okay, what's the price you want to pay then? What's the best case scenario? What's the price you want to pay then, right? So you're going to kind of get 3 different prices you're going to want to pay for a property based on 3 different economic scenarios. Obviously, no one knows what tomorrow holds. So all we could do is put these projections on the board and say, what's the most likely one? What's kind of the average, all 3 of those numbers, and then try to move in around there, and be conservative. We do assume interest rates continue to rise. We assume cap rates increase, meaning property values will decrease slightly, or just at least not grow as aggressively. And then we also assume inflation slows down. So to like 2%, where it is a historical average, or even 1%. That means our rents aren't going to grow as much. And right now, like when I'm buying a building, I'm pricing out my rents. I'm going to price it at what they're getting, right now for 2 bedrooms in that building. Renovated 2 bedrooms, for example, are going for $1,850 in this building we're buying in Trenton. So I'm not going to assume I can get $1,950 or $2,000. Now, listen, I'm going to, renovate the common area better. I'm going to take the gym, and instead of using it to store construction material like the landlord's doing now, we're going to make it an actual gym. It's got his and her locker rooms, 4 saunas already. We're just going to make it into a gym. So we're going to improve the units a little better than they're already doing. But even with all these additional amenities and renovations, then I'm still expecting to get what he's already getting for renovated 2 bedrooms, right? So, and then I look at the competition in the city. What are similar buildings getting? Wow, they're getting $2,250. And I need $1,850. Okay, well, that makes me feel comfortable, right? And they're already getting it. They have no vacancy, right? They have no availability in that $2,250 building. So that's a good sign for me at $1,850, right? So we're just doing our homework, doing our research, assuming the market slows down. And right now, interest rates still really aren't that bad. Prices are starting to come down a little bit. And I'm thinking to myself, if this is like a 6-month or 1-year period where it's like finally a buyer's market after 10 years of a seller's market, I'd be a fool not to take advantage of a buyer's market. You buy in a buyer's market, you sell in a seller's market. So yeah, it's a good time to buy real estate because it's a buyer's market. Just buy smart.
Yeah. No, I totally agree with you. Just know your numbers. And also I think something that I would pay attention, guys, is what are you borrowing the money at? If you're either doing a syndication, a private money, private equity deal, look at your borrow rate versus a cap rate actuals or the pro forma, and always have a buffer, because if you don't have a buffer where your borrow rate is 2 points below your cap rate or higher, that might get you in trouble. And then I like what you said about the the rates, market rates, with storage units, some of my colleagues, Aaron, are raising rates every 3 months. So talk about like getting a storage unit to perform. You could get it to perform pretty quickly within 3 months, less than a year. And so that's why I also definitely like storage units. You don't have to wait a full year on the lease or 2 years. You can start to bump it up pretty quick.
Oh, that's nice. That's nice. Yeah, that's interesting. There's no rent control, right, for storage.
Yeah, exactly.
That's really
exactly. There's another reason.
That's huge.
That's another reason why I like storage units.
Yeah, that's nice. That's nice. I like that.
Yep. So I think I mentioned something about tenant friendly, landlord friendly, blue state, red state. Ideally, how are you looking to approach these states when you're either investing or doing your due diligence on some of these multifamilies?
Yeah. Well, I got to write my book, navigating the red tape in a blue state. And that's I'm working on that one. So it's really tough, and it does keep a good amount of people out of the market. Most real estate syndications focus on Florida, Texas, the Carolinas, because they're landlord friendly states. Tennessee, kind of the South generally. So, or the Midwest. And I get that, it's tough understanding the changes in rent control from one city to the next. You throw a rock 100 feet, there's different rent control laws. So that's definitely frustrating to deal with that, but knowing how to navigate the red tape, knowing how to navigate the rent control, the certificate of occupancies, just figuring out who the inspectors are, what do the tenants want to do, what's the process there, sometimes getting capital improvements done and presenting it to the board and getting improvements there. It's similar to like what I was saying before, kind of like the more barriers to entry you have to an asset class or a market, sometimes the more rewarding it is when you finally execute properly on it, which was one of my arguments for apartment buildings over self-storage, that they're hard to build apartment buildings, and you could also say, well, that makes self-storage more attractive too, right? I get both sides of the argument, right? But my argument would be, okay, well, if it's hard to build something, it takes longer to do it, there's more approvals, there's more red tape, there's more government control. Now it's even harder than ever, like 20% has to be affordable housing, all this stuff. So, well, that means less people are going to build it. There's going to be less of it. Therefore, the value of what I own is always going to be greater, right? That's why I brought so much effing Bitcoin. Because I was told that they're not making any more of it. So the value of it's always going to be strong. But I was wrong when it comes to Bitcoin. I was wrong. And so was everyone else. Real estate, it's really hard to build it. And you need it. It's a commodity over your head. So that's why I own so much real estate. And I knew that already. I'm not sure why I invested so heavily in cryptocurrency, but that's a different webinar we're not going to go over right now. The bottom line.
I took my licks too, Aaron. I'm right there with you, man.
Oh my God. I don't even open the app anymore. The only reason I delete it from my phone is
stop looking at my Coinbase account.
I don't even know. I don't go on it anymore. I just don't go on. I'm done.
Yeah, you know what they said? I forget who said this, but they're not building any more dirt, right?
Yeah.
That's real estate. So,
right.
And then I think somebody else said it, one of these wires gurus ahead of us said something like 80% of your portfolio should be real estate, 20% everything else. I do believe that. I really, really believe it, whether it's multifamily, storage unit, mobile home parks, retail, buy real estate and wait.
Yeah.
If you buy wrong, just hang on to it.
Right.
Time will cure it.
Yeah. It's funny, right? Like I'm looking at properties I bought, 8 years ago. Like when I paid for like $135,000 for one of them, and he was asking 150, and I was like, well, I'm not going to buy it. I need it for 135,000, so I got 15,000 off. It recently appraised for 650. I think I put 50 grand into it over the years, maybe 75 grand into it over the years. So like, it's funny, there I am, 10 years ago, 8 years ago, like negotiating 15 grand off the price. Like, but like, if I didn't get that 15 grand off and I didn't buy the building, it wouldn't have mattered if I paid 150 for it over 135. It's worth 650 today, and I put like 50 to 75 into it. It's been one of the best investments I've ever made, and that's because you just buy real estate and wait. Now, it was near Rutgers University. It was a great snag, but it's just one of those deals where it's funny. You look back and negotiate $15,000 off an asset that's going to like quadruple in price in 8 years, and it can really be a great investment if it's managed properly in the right markets. And that's it. North Jersey, really holds its value. Downtown Newark, we've done phenomenally there. Paterson, New Jersey, Jersey City. I mean, forget it. You can't even get a deal in Jersey City anymore. Morristown, Plainfield. Now we see the same opportunities in Trenton. We're also looking in Bergen County, Essex County, of course, Union County. Great markets to invest in. Just basically buy real estate and wait. Don't wait to buy real estate. And that's such a great line.
Oh, no doubt. No doubt. I had a fourplex a while back here in San Diego. I bought it for $450. A little bit of creative financing. It was an 80-15-5 loan. I came in with 5%. But I was able to get some closing costs and my commission 3%. So it was like almost a no money deal. I got excited because I sold it in 2 years for like $650. I should have hung on to it. Guess what it's worth now?
Probably like 1.5, right?
You're right on the money, Aaron.
Yeah.
You are right on the money.
Oh, I know my real estate, man. I know.
Right on the money. Don't sell. You got something nice that's performing. So what if it's even a little bit? At least it's performing and you hang on to it. If you're here on the West Coast, California, or some of these higher appreciating markets, man, it really blows up in your favor. And man, fast forward, I mean, what's the return on that?
Right. And it's so funny, when the pandemic first hit, we were all like also panicked, should we sell our assets? Oh my gosh, like it's and it took off from there. But yeah, I mean, you just look back the last 12 years, it's been an incredible bull run on property values. And I remember 2016, everyone was like whispering, oh, the market's going to top out. It's done. 2018, it was done. It's going to tap out. Forget it. No way it can go higher. 2020, of course, the pandemic, the sky was falling, sell it all tomorrow. And I don't know. I mean, even if a recession comes, we lose part of our property value, continue to collect rents, batten down the hatches, own a commodity that people are going to continue to pay for through thick and thin. And in time, it'll come back and interest rates will come down and the value is still going to be there, unlike cryptocurrency.
Which one did you buy, Aaron?
Oh, I bought them all, my friend. Here's what I did. All right. So first I bought a Bitcoin at 30. Seth and I went in pretty heavy. So we're all right, let's get a whole Bitcoin because we want to own a whole Bitcoin because that's what we want to do. For some reason, our egos were playing us. So then it went up to 66 and we're like, wow, in like 3 months. So we're like, we're the smartest guys in the room. So I took another 30,000 and bought altcoins. And altcoins were even a worse investment. Many of them have dropped by like 80% now. So, lesser known cryptocurrencies. So didn't really do the right research. Didn't follow any of my investment fundamentals. Didn't practice what I preach in buying, high demand assets that produce cash flow and are revenue generating. And backed by brick and mortar assets and the commodity people are always going to need. Like everything I say, I didn't do. And I'm so annoyed. And I got caught up in the crypto craze, and I didn't sell it, but I kissed the money goodbye at this point. I think it'll come back one day, but any investment with this volatility and produces no cash flow is not a good investment. So even when like my crypto friends say like, no, man, no, I lost all my money too, but like, it's still a good investment. Don't sell. I'm like, it doesn't really matter anymore. If you invest at 66 and it goes to 18, I don't really care if it goes back up to 66, even 100 again. The volatility is not what I'm seeking as an investor, and anything that is that volatile, then you're really just not going to get it at the right price if you try to play the market. And what good investments offer are consistent returns. Good investments help you sleep well at night. Good investments, you say, well, you know what, even if all the naysayers are right and the market does dip into a recession, I know I own assets in high demand markets that people need through recession or not. So I'm confident I can sleep well at night. And that's what good investments do. So I don't care if cryptocurrency goes back up and goes to 100. It's a stupid investment. That's my opinion on cryptocurrency.
Yeah, it's a really new thing. It's very high risk. And like you said earlier, my dad used to say it all the time. Joe, make sure you cover the basics: food, shelter, clothing, food, shelter, clothing.
Mm-hmm.
He would always say that. And I do agree that yeah, it's tried and true. Real estate is tried and true.
Mm-hmm.
Crypto, if you do anything, man, no, it's almost like going to Vegas.
Yeah, I mean, I looked at it as like a savings account kind of. I was like, oh, I'll park some money here. I was like so confident in it. I don't really know what I was thinking. Like I was extremely confident in cryptocurrency.
Oh, I had a client, Aaron, that I was coaching last year. And throughout the year, he's selling homes, wants to sell more, and I'm teaching him some different strategies. And towards the end of the year, we did the annual review. And I go, hey, not a bad year. You made over 200,000. He goes, Joe, you know what? I'm actually gonna probably go and stop real estate for a while. I'm gonna head down to South America. I'm gonna park myself there for a while. I go, why are you doing all that? He goes, Joe, I actually did better with my NFTs and crypto. And I'm like, oh no, I wonder where he's at now. And he literally packed his bags and took off.
Ooh.
So I'm like, yeah.
Did he sell? I mean, because if he sold, in November or October, he would have been okay.
I don't think he did.
Yeah, that's the problem. Like so many of us were like, oh, it's the greatest thing since sliced bread. And you're in this bubble where all your friends are doing it. I had a ton of friends that got in at like 4,000, 6,000 and like put a lot in. One of my buddies is a school teacher and he got a ton in at a low level, got a bunch of altcoins at crazy levels, kind of knew his stuff, and then he quit his job. He made so much money. I saw that and I was like, oh, like my head, I was like, oh, I gotta get in, and us real estate guys, we get a big liquidity event. We're flush as ever, never gonna ever.
That's what I've been telling a lot of my realtors that I'm coaching and all these people playing in the brokerage space. You make more, you don't spend more, you invest more, make more, spend more. You see them buy the latest, fanciest toy out there, the nicest watch, the nicer car, they upgrade their house, or playing that keeping up with the Joneses thing.
Yeah.
And unfortunately, I did that, early 2000s, because I mentioned I've been a broker since 24 years in brokerage. And I was young, I started early 20 or mid 20s. And, in 2005, I cleared $1 million. I sold 113 homes and I was a heavy hitter.
That's awesome.
I kind of played that game, keeping up with the Joneses. And I was up for a rude awakening shortly after that. So like I'm older, wiser now. And I'm trying to tell folks that, man, take these checks. You make more, you don't spend more, you invest more, invest in yourself, invest in real property, tried and true. Yeah.
And when you invest wisely, it opens up so many more options. Like, I was a single guy living in Hoboken, I got into that too, the lifestyle, the nice car, the fancy apartment, eating out all the time. I go out like every night. Like I can't even imagine that now, and that now I have a wife and child, I live in a nice home, everything, a nice life, very comfortable, but you just you realize it's like there's more important things to do with life, but also it's like, wow, like if I really was smart with my money at that time and did what I do now with my capital, if I invested wisely in good assets, then I won't have to work as hard. If you continue to invest with that mindset, and you really can retire young. Like the American dream is real. It's out there. Making $1 million in your 20s or 30s, that's incredible. And the biggest mistake, I mean, that's so much money. You think about it, like if you could just live on 200, and take 800 and put it into something smart, boy, by now it'd be like quadrupled, and who knows, so if you put it into Bitcoin, It would have been the best investment you ever made.
And that's something I did learn also, guys. If you're in the audience looking at single family, that was my portfolio. When I did that first run, I invested in a lot of single family. I had about a dozen homes. And one of the things that I did learn, through some of my colleagues is multifamily or more property, more doors is a way to go, because you do minimize your risk. Because kind of like I tell people, hey, one single family versus is like having one house. If it's 100% not occupied, you're 100% out of money. If you go to a fourplex, if one of them's not paying, at least you're only 25%, whether it's storage units or multifamily. You go to 10 doors, one's not paying, you mitigate your risk even more. You're at 10% mitigation, right? Yeah.
That's it. That's it. And that's why we don't buy anything less than 6 units. In fact, we really don't want to buy at this point anything less than about 15 units. I'd say would be our minimum. So, and you get to the 50 plus mark, it gets a lot easier. Absolutely. Everything, costs less, economies of scale. You have to pay people less for things, because they're doing so many of them, right? Your contractors, your leasing agents, your home inspections, everything, insurance, it tends to cost it. So it's just it's a really interesting business. When you get to it's almost easier to make profit off a 50 or 100 unit building than it is a 5 or a 6 unit building or a 2 unit building, right? And that doesn't make any sense, but I mean, it's definitely hard to find it and put the capital together and qualify for the loan and manage it. But at the end of the day, it's more forgiving. You lose one tenant in a 50 unit building, that's nothing. You're still gonna be fine. You lose 5 tenants, be okay. In fact, we're renovating buildings right now. We'll have 4 or 5 units vacant, under construction, being leased up, and we'll still be able to maybe cash flow a pension on the property. So that's just incredible, because we're building value, increasing our rent roll, and still cash flowing on the asset a little bit as we go. So that's not very common, but there's something we try to work towards for sure. Yeah.
Nice. That's great.
Yeah, definitely. So if we have any questions, please type them in the Q&A or the chat here. I don't see any questions right now, but Joe, I think that was all the questions we had to go over. Is that correct?
Yeah, I think so. Yeah, I don't see anything else.
Okay. No, I think we had a good talk tonight. We went over self-storage, which I really enjoy. Like I said, it's my second favorite type of real estate, and only for the reason that I do feel like people are going to pay for a roof over their head before they pay for junk. But you had a lot of good reasons. It's easy to build it. It's easier to manage it. It's easier to evict the tenants, and you had a lot of other reasons as well. But no, it's really exciting there. And I talked about how we like apartment buildings, prefer that, and kind of the barriers to entry to building them and owning them and repositioning them, the challenges therein. So sometimes I feel like it's something's a little hard to do. There's more reward at the end of it. But really great information. How can people learn more about what you do, and what are you all offering these days? What you guys doing?
Sure, absolutely. So I wrote that book a while back, right when COVID hit, Flex with a Plex. And I mentioned diversification. Best way to get a hold of me is joemendoza.com or 877-794-5227. If you go on my website, I do offer a free class there that if you're kind of getting started, I talk a little bit about some of the tips in Flex with a Plex on there. You could find that on Amazon. And yeah, feel free to reach out. I really am a strong advocate of real estate, and I am an advocate of helping people get out of the rat race, and whatever I can do to help, I'm here for you.
Okay, that's awesome. Here's what I'm going to do on my end. I just put a link out to our chat, and Joe, if you want to type in the chat, make sure you send it to everyone. Sure. Your contact information, your website there, that'd be great. And I'll leave this up for a few more minutes here. But yeah, the link I put up is where you want to go to start an account to review our upcoming offerings. There is a qualification process to get qualified to invest with us. You have to be either accredited or a sophisticated investor. And you can learn more about what that means at our website, peoplescapitalgroup.com. But yeah, I put up there our link to go to our portal, our investor portal, and there you can actually check out upcoming deals. You can get qualified as well, schedule your discovery call, and which is the next step of getting qualified, is actually having a chat with me about your investment goals and seeing if they align. I'm also going to put in there our website, peoplescapitalgroup.com. We do weekly podcasts. Joe was on one a little while ago. We have weekly blogs. Oh boy, we have multiple webinars. This will go up there in a few days as well. Doing 1 to 2 webinars a week these days. Lots of stuff going on. So I'm probably going to slow down a little bit of that in July because it's July. So.
Oh yeah, vacation time.
Oh yeah, absolutely, absolutely.
You going anywhere fun?
Oh my gosh, my wife and I were like trying to finalize our vacation plans, and we just haven't done it yet. And now it's June 22nd, and we're like, what are we doing? We need to just book something already. So, it's tough with the baby. We weren't sure if he was going to be able to fly yet, and now we're like, well, he probably could fly. So should we do should we just do a road trip? So, he's 10 months old. So we're kind of weighing lots of things right here. It's our first child. So we're figuring out as we go along,
Nice. Congrats. Well, recommendation, if you go on a plane, one of the secrets they say, I don't know if you know the secret, right?
I don't.
You don't? Okay. Some people are for this. Some people are against Benadryl.
Benadryl. Yeah, it might be the first time, No, that's fine. My mom would always have us chew gum. I guess that was one thing.
Oh yeah, 10 months old. I don't think they could chew gum, right?
Yeah, Benadryl.
Their ears pop. Yeah. So they're like screaming sometimes in a plane, right? Yeah. So yeah, that's why some people recommend that.
Yeah, their ears don't do well with it,
No, and they don't know how to like adjust. So
yeah. I don't know. I don't know if I want to put the little guy through that.
Mine are a lot older.
That's the thing us new parents deal with, right? Do we, sacrifice part? Actually, you can have a really nice family vacation though, just doing a road trip. Actually, it's we live in a good area. There's a lot of stuff.
It's a great time of the year to do a road trip. Absolutely.
Yeah, absolutely. So maybe we'll visit some family, kind of get a little trip. We like to visit baseball stadiums. My wife and I have been to 14 Major League Baseball stadiums, so we enjoy that.
Wow. Yeah, it was a treat. I mean, I'm here on the West Coast, but I went to Boston and checked out their field. I checked out when I was in Chicago. I mean, it's a lot different from the fields here on the West Coast.
Yeah. And we got to get over there and check out the West Coast for sure. That'd be cool.
Yeah.
All right, great, Joe. Well, it was good connecting with you here. I'm glad you're able to put your information up there in the chat. I did as well. Our website, you can learn more about us. And I also put up our investor portal. You can actually start an account and get qualified to review our upcoming offerings. So that's exciting. Like I said, we have something coming up very soon. Hopefully in the next 2 weeks, we'll get this 63 unit under contract. And if that doesn't go through, we got another one right behind it. So definitely some good opportunities coming. So if you haven't signed up yet, check out our investor portal there. And there's Joe's information, joemendoza.com. You do real estate coaching as well, correct?
Yeah. It's actually something that I love to do. I mean, it's kind of the give back that, one of these things you see, you want to get fulfilled or contribution, whatever, that satisfies that thing in my life. So I love doing it.
Cool. Awesome.
Yeah. Well, thanks for having me, Aaron. This was super fun, and I'm not super opposed to multifamily. No, of course not.
Yeah. Well, listen, if you got a deal, send it my way. I'm curious what you got going on, and I'll do the same on mine. Make sure you're on our investor list there. And let's see, maybe we'll build our wealth together one day. That'd be a lot of fun.
No doubt. Well, you mentioned retail. I did too. So
there you go. Maybe we'll meet in the middle on retail.
There you go. Awesome.
All right, buddy. You have a good night. I'll see you soon.
You too. Good seeing you. Thank you.
Bye.